This is your LMAX exchange technical update for Friday, July 7, 2017. Euro dollar. So the euro has been bid up in 2017 since trading off a 14-year low at 103.41. But the market is finally coming into some critical longer-term resistance. And if we look back to 2015 to present, you can see that the market is basically range bound and coming up into this range resistance, which is in the 115 to 117 area. We have some initial resistance that we're yet to test into Friday, just shy of 115, which is some falling trend line resistance off that 2015 high. But again, there's room for this market to extend up into the 115 to 117 area, at which point we could then see the euro top out and then resume this range trade for a bearish reversal to the downside. If we consider this latest break this week above recent highs, we could see an extension to a measured move into the 115.75 area. But again, it looks right now like this euro run could be closer to ending than getting going, and we could soon see the market stall out somewhere above 115 in favor of a more significant bearish reversal and resumption of this longer term range. Only at this point a clear break above 117 would suggest that this market is putting in a more meaningful longer term base and a structural shift. Until then, there is risk for this resumption of a broader range off what has been a longer term downtrend in the euro. Sterling dollar. So cable has been chopping around since putting a 2017 high in at 130.48, and although the market is trading just under that level, there is risk for more choppy consolidation before the market ultimately breaks higher towards its next key measured move extension at 135. 135 is an extension following the breakout above 127.75 in April. That 127.75 level had been a cap on a range that had defined the market off that plus 30-year low at 118.40 from back in October for several months. But again, the breakout above 127.75 suggested that the market was seeing a more significant structural shift and could be poised for this next measured move extension towards 135 further up. At this point, though, if we do see setbacks in the sessions ahead, expect them to be very well supported into the 125 area, with only a breakdown below 123.60 to really compromise what is a newly adopted constructive outlook for sterling dollar. Again, that doesn't mean that the market's going to break up and accelerate necessarily just yet, and we could still see some choppy consolidation before this market decides to extend towards 135. Dollar yen. So dollar yen has traded up over the past several days, but as we've been highlighting in our analysis, the market on a broader basis is still showing signs of being well capped into rallies, and while it holds below a recent high at 114.37, there's risk for another topside failure and resumption of declines back down towards that 2017 low just shy of 108. Euro Swiss. So Euro Swiss is doing its best to try and take out that critical psychological barrier at 110, with the market pushing up to a fresh 2017 high. But attempts to break above 110 have been unsuccessful recently, and the market would really need to establish above that level to force a structural shift. Until then, if the market is not able to establish above 110, it leaves the door open for a resumption of what is a broader downtrend and the possibility for an acceleration back down towards more meaningful support, which comes in around the 106 area. Of course, we would need to see a breakdown below 108.30 about to strengthen the bearish outlook and accelerate declines. But again, while the market holds below 110 on a close basis, the risk remains tilted to the downside. Aussie dollar. So the Australian dollar recently traded up back above 77 toward 78, but the market, as you can see, continues to be very well capped on a medium-term basis up towards 78, and so we're seeing the market stall out yet again up towards 78 in favor of a resumption of declines, which could take us all the way back down towards recent multi-day lows in the 73.30 area. Only above 78 would really compromise the outlook for Aussie dollar. Dollar CAD. So dollar CAD has been very well supported of late on dips below 130, and this follows an intense decline that we had seen off the 2017 high just shy of 138. So we have seen about a 10 big figure drop since that 2017 high in May, and this suggests that the market could soon want to base out in favor of a longer term uptrend and head back to the top side. We would, however, need to see the establishment back above 130.50 to strengthen this outlook and accelerate gains. Kiwi dollar. So the New Zealand dollar overall has been a market that's been very well capped into rallies up towards the 74 area, and so this latest rally is expected to once again be well capped ahead of a bearish resumption back down towards the 2017 lows, which come in around 68.20. SPX 500. The S&P 500 has slowly been stalling out after putting in a record high back in the month of June, just over 2450, but ultimately this is a market that remains highly constructive, and only a close below 2400 would force or at least take the pressure off the top side. Until then, the market is at risk for a fresh upside extension towards a record high and measured move extension at 2480. Again, a break and close below 2400 would be required at a minimum to take the pressure off the top side, while a break back below 2320 would force a meaningful shift in the structure. Gold. So gold has been constructive over the past several months. Despite this latest pullback, the market overall has been very well supported on dips, putting in higher lows and higher highs. And so this latest round of setbacks is expected to be supported in favor of a bullish resumption, ultimately back above the 2017 peak, just shy of 1300.